Let's talk about our profitability ratios. What are the profitability ratios that you know of?
Gross profit margin, markup, profit margin, ROCE, expenses to revenue, and operating expenses to revenue ratio.
Do you know the formulas of it?
Yeah, gross profit is profit for the year, no, profit before operations divided by cost of sales into 100.
This is gross profit margin. What
Oh,
could be the formula for gross profit margin?
gross profit margin.
Margin is on
Oh, cost of sales.
sales.
Yeah, sales. Okay,
Margin is on
sales,
and markup is on
cost of
cost.
sales.
So
Oh,
what is the
cost.
formula for gross profit margin?
Sales
Gross
divide
profit.
profit divided by sales into 100.
So gross profit margin formula, please write it along with me.
Yeah,
Gross profit over
gross.
revenue
Yeah,
into 100.
yeah.
Can you give me the formula for gross profit markup?
Gross profit divided by cost of sales into 100.
It is gross profit over cost of sales into 100.
Yeah.
Can you give me the formula for profit margin?
Profit margin, profit divided by cost of sales into 100.
Is profit a percentage of sales?
Right? Profit for the year divided by cost of sales into 100.
It's margin.
Yeah, so we'll take sales, right?
So why are you taking cost of sales?
Because you said something, I don't know.
Margin is on sales.
Yeah, I know. You said, I don't know.
Margin is
When
on
I,
sales.
hmm, okay.
Markup is on costs.
Cost.
So this is margin.
Yeah,
Margin will be on.
sales.
So it is profit for the year over
Profit for the year over revenue
into.
into 100.
This is the profit after interest. Always keep that in mind. Okay. Okay.
Yeah.
Now return on capital employed. What is the formula for return on capital employed?
Return on capital employed is capital, no, cost of sales divided by capital employed into 100.
What is the return that you get when you do this?
Return you get is profit. Or profit before interest divided by capital employed into 100.
What is the meaning of capital employed?
The amount of money used to
Used
make the
in the
business.
business.
Yeah.
Okay. So this is profit from operations. Okay.
Mm.
It could be profit before operations or it could be PBIT, profit before interest and tax.
Yeah.
Are you with me?
Yeah.
What is the formula for capital employed?
Capital employed, assets minus liabilities.
Total assets minus current liability or
Or current no. Right. Is it something else?
hmm,
I don't know. I just know total assets
it
minus
would be capital plus
plus current
non-current
liabilities.
liability.
Okay.
So if you're in a limited company,
Yeah.
what will be the capital?
Limited company.
Hmm.
Capital will limit shareholders. I mean, ordinary share capital, share premium. That one.
Okay, ordinary share capital
Yeah, share
plus all
premium.
the reserves.
Yeah.
Okay, so ordinary share capital plus all the reserves plus
Yeah.
your non-current liability. This will give you your capital employed.
Mm.
What is the formula for expense to revenue ratio?
Expense divided by revenue into 100.
What is the formula for operating expense to revenue?
Operating expense divided by revenue into 100.
Hmm?
Operating expense divided by revenue into 100.
Okay, operating expense. Okay, expense upon revenue into 100.
Yeah.
And operating expense to revenue?
Operating expense divided by revenue into 100.
Operating expense over revenue
into
into
100.
100. So you know all your profitability ratios, right?
Mm-hmm.
I have given it down for your reference. Do
Yeah.
you know any liquid ratios? Do you know the
Yeah.
liquid
I know
ratios?
liquid. Yeah. There's
Yeah,
current ratio. Current ratio is current assets divided by current liabilities, and asset test is current assets minus inventory divided by current liabilities.
okay. Efficiency ratios have made a
We
video.
done.
You can see it.
Yeah.
One is the non-current asset turnover ratio.
Yeah.
What does it mean?
Non-current asset turnover ratio is the amount,
The
the
net
revenue.
revenue
Yeah.
over the net book
Book
value
value of non-current
of
assets.
non-current asset. What does your non-current asset turnover ratio tell you?
How much? How much?
How efficiently,
Yeah,
what does
the
it tell you?
non-current. How
How
efficiently is the
efficiently you
non-current
are
asset?
using
The
your
non-current asset.
non-current assets to generate
Yeah.
revenue.
Mm,
Okay. The
okay.
bigger, the better.
Mm,
And these ratios, these are efficiency ratios,
yeah.
right?
Yeah.
Okay. Solvency ratio, the first solvency ratio, what is it?
For solvency.
Working capital
Yeah. Working capital
cycle.
cycle. Yeah.
Okay, what is the formula for working capital cycle?
Trade payable, trade receivable turnover plus inventory minus trade payables.
Okay, very good. Now, this is the sum. You have 2 years over here.
Mm-hmm.
Okay, you have to find the ratios. You have to find all the profitability ratios. What are the profitability ratios? Can you tell me orally?
Profitability ratio is gross profit margin, markup, profit margin, operating expense to revenue, and revenue to expense ratio.
Return on
Return on
capital.
capital employed.
Okay, again, can you tell me what are the profitability ratios?
Gross profit margin, markup, operating expenses to revenue, return on capital employed, and profit margin.
Profit margin. Okay, so you have to find for 2019 and you
Yeah.
have to find for 2020,
Mm,
2020. When
okay.
you are finding for 2020, there is some additional information that is given to you.
Okay.
So you will keep in mind this additional information when you are calculating the ratios for 2020.
Mm,
So you can pause the video and you
yeah.
can solve this and then start.
Yeah. I got.
So you can use this as your reference answer. First, you will calculate for 2019 all your ratios, and then you will calculate it for 2020.
Mm.
Okay.
Mr. Mike is muted.
Answers?
Huh?
You got the same answers?
Yeah, I got the same.
Okay. Can you just give me a quick recap of the gross profit margin ratio? What is the formula for gross profit margin?
Gross profit divided by revenue into 100.
Markup,
Gross profit divided by cost of sales into 100.
operating expense to revenue,
Operating expenses divided by revenue into
operating profit
operating profit divided by operating profit divided by cost of sales into 100,
by cost of sales.
because it's margin.
Margin.
Yeah, it's margin.
Margin is on
Margin is on cost of sales.
sales. Yeah.
Oh, margin on sales. Okay.
So operating profit margin.
Yeah. Oh, yeah. Sorry, sales.
Okay.
Sales. Yes, yes.
Mm-hmm. Profit margin,
Profit margin is um operating profit divided by sales into 100.
return on capital employed,
Return on capital employed is wait, return on capital employed is profit before interest divided by capital employed into 100.
okay. What did you do for this fuel price increase by 10% during the course of the year?
Mm, fuel price increased by 10% during the course of the year. I didn't use that.
Okay, they have already done the thing and they have put it over here. So
Yeah.
fuel price increase, so operating expenses increased.
Mm,
Okay, just see if 1750 plus 175. Okay, so they have already adjusted these expense and done for us. So
yeah.
this is how we've completed the profitability ratios. Now, can you tell me the non-current asset turnover ratio? What does this tell you?
Non-current asset turnover ratio. It tells you how efficient a machine is on generating revenue.
How efficiently you're using your non-current assets to generate
Generate
revenue.
revenue, yeah.
I have two company. One is company A, one is company B.
Hmm.
Can you tell me which company is more efficient?
Mm, A,
Why?
because
See,
they're
you see, company B has non-current assets only of 2,000, but it is
yeah.
generating revenue of 40,000.
Oh, okay.
So, which company is more
B B
efficient?
B B B.
B. So, the larger the better.
Hmm.
But you should take care that these non-current assets should belong to you. It should not be that you've rented it. That is why the amount
Hmm.
is less.
Okay.
Okay? The larger the better.
Better.